Hey, what's up, you guys? It's Marcos, and today I want to be talking to you about how to build a real estate rental portfolio, probably the easiest and cheapest way that I know, and that's by securing the easiest kind of financing. And this video is going to be really good for those who are either starting from zero, starting from scratch, or maybe you already own a home or a couple of homes, and you want to keep building up on your rental portfolio so that you can start getting that really cool passive income and start building wealth through real estate. Now, this video is going to be geared for those who are looking to build a residential rental portfolio. So anything between 1 to 4 units. If you're looking for like commercial financing, this necessarily wouldn't be for you because I'm not going to be covering that in this video. Without further ado, let's go ahead and get going. And by the way, this video might be a little bit long because I'm going to be giving you different strategies, and you can actually just check out the timestamps below to make your viewing experience a lot better, and you can just skip over things that you probably wouldn't necessarily care too much about. Okay, now let's go ahead and just start with those who really don't have any property. So you don't own any real estate whatsoever. You're probably renting a home, or you're living with your parents, or you're living with your girlfriend. Whatever the case might be, you don't own any properties, but you obviously want to start getting into real estate. Now, the easiest way, guys, for you to get into real estate is by buying your first primary home, okay? So you don't necessarily want to start buying a rental property right away. And I'm going to tell you why. The first reason is because getting a loan for an owner-occupied property is a lot easier. You're going to be able to get in with very low down payment options, maybe even no down payment options. When you buy your first home or your primary home, you're going to be able to take advantage of certain loan programs. You can do like an FHA loan that, allows you to purchase a home with a 3.5% down payment. Or maybe you can do a conventional loan with a 3% down payment. Or maybe even if you're a veteran, you can do a VA loan with absolutely no down payment necessary. Or maybe you live in a rural area and you can take advantage of the USDA loan program that actually also does not have a down payment necessary. Those options for owner-occupied properties are going to be giving you guys the chance to get into real estate in the cheapest way possible, adding to the fact that interest rates will also be very, very low because they are going to be for owner-occupied properties. And you can do this for single-family homes, townhomes, and multifamily properties as well as condos. If I were you and I don't have any properties whatsoever at this moment, that's really kind of what I'm looking at. Now, one of the things that I would do if I was a first-time home buyer would be to look into more of properties that would allow me to house hack. And that would be pretty much with any properties that might have either an in-law suite or an outhouse or a guest house, so that you can rent out, the in-law suite or the guest house, and that way you have somebody that's going to be pretty much paying part of your mortgage. Or maybe look into a multifamily property such as a duplex, a triplex, or a quad. It's really cool because you can actually live in one of the units and rent out the other units and receive rental income. If you live in an area that has a lot of those multifamily properties, such as in the Northeast, that's something that we'll totally be looking at if I was a first-time home buyer. And a lot of my clients have actually started getting into real estate that way, because you're gonna have somebody or multiple people literally pay off your mortgage, and you're gonna be completely, living without having any monthly payments coming out of your pocket, which is gonna help you start building up onto a down payment for the next property. All right, now let's talk about those who already own a home and you want to purchase another one, but you don't necessarily want to dispose of the one that you currently live in right now. Obviously, if we're talking about building a real estate rental portfolio, we don't want to sell anything, okay? So I'm going to show you how this is going to play out, and it's actually really easy, guys. This is basically what they call a departing residence. And what you're going to be doing is you're going to be departing the residence that you live in so that you can purchase another home that's going to be your new primary property, okay? This is what you're going to need. You're going to have to put a tenant in place, but not yet, okay? You don't necessarily have to have somebody living in your house, by the time you do this, but you want to get somebody in place, get a lease agreement, get a, security deposit check. And that way you can actually show this to the lender so that they can use this new income as income that is going to help you offset the mortgage payment that you currently have, and you can actually qualify for the next property. And you're going to be able to buy the next home as your new primary home with a conventional mortgage, okay? And this conventional mortgage, you can do it with a 3 or 5% down. So you don't necessarily have to buy this new home with 20% down if you don't have to. or if you don't necessarily want to do that just yet. Okay, this will be the easiest way, honestly, to get two properties. Now you have the one that you have already, and then the next one is going to be your new primary home. And as a sort of a strategy that I would do here is I would do the same thing as if I was buying my first property, which would be something that allows me to get some income from it. So it could be a property that has an in-law suite or a guest house so that I can rent out those things, or maybe even a multifamily property. Or possibly I will do this with a home that needs some renovations, and by doing a few things, I can actually increase the level of equity. And you can actually do this very easily with a renovation mortgage. And by the way, guys, if you don't know what a renovation loan is, make sure that you check out the video above me where I basically talked about how to get a home style renovation loan, and it's actually very cool and very simple to do. And that way you can build instant equity, especially in this market nowadays. Even though there's not really a rule of thumb on how many primary homes you can buy, it's gotta make sense, okay? So it's not like you can go and buy a primary home every 3-5 months, because that's not gonna make any sense. It's not gonna fly anywhere. But when you purchase a property, you are telling the lender, if it's going to be a primary home, that you are going to be occupying the home for at least 12 months. Okay. So you can keep playing this, strategy of buying new primary homes sort of every 12 to 24 months. Obviously it's going to take a while for you to build a portfolio this way, but it is possible. And, obviously you can keep doing this so as long as it makes sense that the new primary property is actually going to be, a move up property, or it's going to have different features that probably the previous one didn't have. So it's going to be, even though there's just no rule of thumb, you can definitely do it. You can definitely buy maybe even 3 to 5 properties. I'm not going to say that you can't do any more, as in the way of you purchasing almost primary homes, because you lived in each one for probably 12 to 24 months. Okay, so it's not illegal, you're not doing anything wrong, because you are in fact going to be living in these properties for a period of time. All right, now the quickest way, guys, so that you can go from probably 2 properties to 3 properties will be by getting some equity from your homes in the form of probably cash out, or with a home equity line of credit. And now, if you had already got a home before, maybe now you're gonna be looking at your rental property that already has more equity than the one that you just purchased. You can go and get a refinance on a cash out, or probably put a HELOC on it so that you can access the equity. And now you're gonna have money so that you can purchase an investment home right away. So maybe you're looking at something that's very easily attainable as an investment property. You might want to fix it up and then just rent it out. Then you can just do a cash out refinance on your rental property so that you can purchase the next one. And some of you guys might know about the BRRRR method, where you basically you buy, you rehab, you rent, and then you refinance. It wouldn't necessarily be something like that, but kind of goes in the same, stratosphere, I would say. You know what I mean? You're basically refinancing, so you're getting some money out, put some money in your pocket, and then going to the next player, right? And then you can just sort of like keep doing this, with more properties, once you start kind of getting into like 4 or 5 different properties. All right. So now you guys own a couple of properties, or you own 3 by now, and you want to do one more, but you still don't want to do a 20% down payment for a straight up investment home. Let's talk about the strategy that most people actually don't know. And that's going to be by buying a vacation home. Now, you can buy a vacation home only with a conventional mortgage, all right? You can't get it with any government loans. Now, there are gonna be a couple of things that you definitely need to know about this, and some really cool benefits of buying a second home. Now, the first really big benefit is gonna be the down payment, all right? You don't necessarily have to do 20% down just yet. You can do a 10% down payment for a vacation home. But the second cool thing about doing a vacation home is gonna be the interest rates. And interest rates on vacation homes are almost similar to primary homes. So you're gonna be able to enjoy a low interest rate on a second/vacation home, okay? So that's gonna be really key, because interest rate for investment properties, I said this before, are much higher. They're gonna be the highest for any sort of occupancy. So vacation homes are gonna be having the lowest interest rate pretty much just as a primary home. So that's cool. Now, there's going to be a couple of things that you need to know. The first one is a vacation home has to be at least 100 miles away from your primary home. So it's not like you can buy a second home with 10% down in the same neighborhood that you currently live in, or even in the same city. Now, that whole 100-mile thing actually can be bypassed by one thing, and that's if you buy the vacation home in an area that's considered to be vacation. So for instance, say that you live in the city and you have mountains around you and there are some really cool cabins in the mountains. Well, you can buy a cabin, even though it's not 100 miles away from you, it's considered to being a vacation type of property. Same thing goes, maybe you live inland and you want to buy a beach house, and the beach house is not going to be 100 miles away from you. Maybe it's about 50 miles away. Or maybe you want to buy a condo by the beach. Well, you are going to be able to do it because, being by the beach is literally, a vacation, right? That's basically how you're going to be able to bypass the whole 100-mile thing. Now, the one thing that you won't be able to do with a vacation home is that you can't claim any rental income from it and offset the mortgage payment, all right? Vacation properties are supposed to be just for vacation. However, there's nothing says that you cannot get, income from the property. So say that, maybe you want to buy a cabin or a condo by the beach or a beach house and you want to Airbnb it for part-time of the year. You can totally do that. Okay. So you're going to be able to get some money from it, some income from it, even though it's your vacation property. Now you do have to use the property as a vacation for a portion of the year. So it's not like you can just go and buy a vacation home and just put a tenant in it. That will be mortgage fraud. So don't do that. But nothing ever stops you from putting the property on Airbnb, and in the times that you're not occupying it, you are Airbnb in the property or doing some sort of short-term rental. Okay, so that's going to be a really cool key about those vacation homes that most people just actually don't know about. All right, so finally we are at the buying an investment property straight up. All right, and basically the biggest thing that you need to know when you're buying an investment property is going to be the down payment requirement. And investment properties require the biggest down payments. Now, you don't necessarily have to do 20% on a single family home. You can actually get an investment property with 15% down. The only thing is that you're going to have the mortgage insurance. Most people that buy investment properties straight up as an investment property put at least a 20% down on just a single family home. If you're buying a duplex, a multifamily, or triplex quad, it's pretty much same thing, or a condominium, then the down payment requirement is actually going to be 25%. So you got to keep that in mind, guys. But by now, you've already got a couple of properties under your belt, or maybe 3, or, kind of at this point of the video, you probably have 4, with the second home strategy, and you have equity in those properties. So you can now pull equity and buy the next property with your 20% down or even more of a down payment. But this is kind of basically how the game is played. All right, guys. You can actually own multiple properties. You can start from pretty much 1 and get your way up to 4 or 5 in just really a matter of, 4 to 5 years. It is very possible for you to buy up 1 property every single year, especially in this market where homes are continuously increasing in value and your equity position goes up. You can grab equity from your property so that you can reinvest in more properties. You know what I mean? And really, guys, just sort of kind of like leave the, this video here. You can get probably up to 10 mortgages under your name. And you don't necessarily have to go and get commercial loans that require a much bigger down payment or hard money loans or anything like that. However, there is basically that downside that all these mortgages are going to be on your name. So, if you ever default on any of these, then that's not going to be good news for you, because you cannot get any of these residential mortgages with an LLC. All right. They all have to be under your name, which obviously your credit will be tied to all of them. That's it for now, you guys. Thank you so much for watching. If you like the video, make sure that you like and subscribe to the channel. If you have any questions, concerns, or comments, just put them in the comment box below. And once again, thank you so much for watching. Until the next one, goodbye for now.